Welcome to Transform Now, the podcast brought to you by robotic process automation pioneer SS&C Blue Prism. Digital transformation has the potential to reshape the way companies service their customers, engage their employees, and manage their operations. Whether you're looking to develop strategies, tactics, or best practices to positively impact the future of work, or you're curious to see how other companies have successfully navigated their digital transformation programs, then this podcast is for you. We're here to help you transform now.
Hello, everyone. I'm Brad Hairston with SS&C Blue Prism. Welcome to the Transform Now podcast. Today, I'm happy to have with me a returning guest, Purna Doddapaneni, Associate Partner with Bain Company. Purna's previous visit on Transform Now was focused on automation in the cloud. And today, he and I will be discussing some recent Bain research on the impact of automation in the insurance industry. Purna, welcome back to the podcast. Why don't you tell our listeners a little bit about yourself?
Definitely. Thanks to have me back, Brad, after a little over 2 years. So I'm Purna Doddapaneni. I'm the expert associate partner with Bain. I'm the automation product leader. And in my second role, I also am the CTO for Bain Digital Ventures. We help our internal employees that have great ideas to realize them into a great products.
Excellent. Well, it's really good to have you back, Purna. And you, of all people, should be doing this podcast with me in person. I think we live like 5 miles apart from each other. But maybe one day we'll do that. I'm going to have to really brush up my podcast studio / office before we do that. Well, let's talk insurance, my friend. A lot of interesting and exciting things going on in that industry. From your perspective, what are some current trends taking place in insurance that make intelligent automation especially relevant to them?
Yeah, definitely, Brad. Like in our view, we have seen broadly 4 different trends that have been helping in our insurance companies or clients look through intelligent automation. The first part is changing consumer preferences and expectations. As you can imagine, the behavior and the expectations of each of the consumers have been changing pretty drastically. Few examples, they want to have convenience across the digital journeys they go through. They would want to have immediate digital customer experience based on if or when they have an issue. Or if they want to schedule appointments, they would prefer doing it via mobile app or even have a self-service option. The second one where we've seen are the external disruptions. A couple of them would be high inflation. As we can see, global inflation is at a multi-decade high. And this puts an additional increasing pressure on the bottom lines for all of our clients. And the second one we have seen is more of natural disasters and extreme weather events, which are more impactful for the insurance companies. One example is the labor and semiconductor shortage, and along with the supply chain disruptions made the repair cost more expensive for insurance clients. These disruptions are actually making more important the cost optimization that is necessary for them in their operations. Number 3 of these factors we have seen is the Great Resignation. While there are indications that it might have stalled, there is still record number of workers who have left the jobs, and there are record number of openings that are still out there unfilled. And it's more not just about the wages, but most organizations or employees are looking to have a better employee experience, and which is driven by how much work and quality work that you are doing and supporting your customers, and add more of a value added activities. And the one final thing that we've seen in terms of the trends was the technology disruption. There is one element of where newer entrants, digital native entrants, are redrawing the map on how work gets done and how faster, easier they can support their customers compared to the digital firm, legacy firms that are out there. A second part of that is most of the insurance companies have spent the better part of the past decade to replace or modernize their core underlying tech systems and data capabilities. Now, with stronger processes in the core systems and the architectural modernization kind of leans into giving a greater degree of automation that can be enabled than what they were able to do in their legacy systems. And one final thing which has been picked up in the last couple of years is all these digital tools or IoT devices that are enabling new ways you can support your customers. Broadly, these are the four big disruptions that we have seen where insurers are looking towards automation to help them alleviate them.
Interesting. Thank you for sharing that. Purna, earlier this year, your company, Bain, surveyed insurance company leaders on the topic of automation. What did you learn about how insurers view automation in general?
One broader statement that came out on the survey was automation and digitization fuel business transformations. These can help you curb the wage growth for long term. And also the expected labor time savings in most cases have shown, or in terms of the survey data that came out, they're expecting it to increase by 50% within the next 2 years. And most of that has been driven by three big factors. One of them, automation has been growing importance as a strategic priority for all the firms. The second part, organizations and even the technologies are growing in terms of their maturity, and that helps them deploy newer technologies, but also they have the capabilities to deploy them. And then internally, like, they're also looking for not a broad set of intelligent automation technologies that can help them drive a better end-to-end transformation. So that at least, like, in terms of their expectations on how they can see benefits out of automation. Tying back to the previous point that we talked about, each of those disruptions are being leading for insurers to think through to benefit from automation. So one of them is, like, as I said, like, they need to thrive with the changes to the customer behavior more towards a digital trend. COVID-19 has accelerated some part of it, where insurance customers are increasingly engaged digital, both digital only or maybe in terms of hybrid interactions. One example we've seen, or in terms of a data point, in 2021, 40% of life respondents globally used virtual channel at least once to interact with their insurer in the last 12 months. And 50% indicated that willingness to interact virtually in the future. And the other part of the customer behavior is most of the insurers are anticipating that the customers would prefer more personalization and reward their healthier behavior with IoT devices or being connected more to the customer. The second part, what we talked earlier, was on the Great Resignation. As I said, it's more of employee experience that needs to be driven. And the other part, considering the cost imperative for them, it's driving to do more with less resources that they have, which is where automation can help most of the organizations. We talked about the technology disruption, where now the change in your tech stack is helping you find bigger opportunities and drive end-to-end customer engagement, but also growth in the process. And then the newer capabilities, I mean, one of them we've been seeing more, both in terms of the auto insurance, but also health insurance, where you're trying to reward your customers for healthier behavior or better driving patterns. So outside these, the one or two things that we are also seeing higher drive towards automation was in the straight through processing for example, like underwriting or policy insurance policies. Like this, if you can imagine, most of the processes are rules-based, easily automatable, and it can drive a better customer engagement.
Interesting. When you asked the insurers to identify where they expect automation will have the greatest impact within each line of insurance, what did you learn, Purna?
Well, I mean, if you take the value chain of all the insurance, and broadly, I mean, across all 5 or 6 insurance verticals, I mean, you have a value chain both in terms of upstream and downstream. What I mean by that is, like, you start from the product design or risk pricing, marketing, policy underwriting, policy admin, claims management, and probably even asset management and reinsurance. Across these spectrum, the bigger 3 verticals where we have seen higher adoption or interest in automation have been policy underwriting and insurance was one of the verticals. Policy administration and maintenance or servicing has been the second, and claims management has been the third. So those, at least broadly across the spectrum, those have been the 3 big verticals. And within them, you have multiple products or customer episodes, which will vary depending on if you're looking for auto or life or health, group benefits, or property and home. And depending on which of these have, for example, in auto compared to life, there has been heavier automation or progress of heavier use of automation technologies. So for them, it has been more of what are the advanced technologies that we can use versus the basic ones. So that kind of drives some of their specific areas they want to focus on. For example, the big thing that we've been seeing is risk verification and policy recommendation, where now you have more data, you have advanced AI technologies that can go and help you do that process a little more efficient than what can be done in the past. Whereas if I look for life, it's been like the ones that auto has already tackled, like billing and payments or contract management. All of these have been, in most cases in auto, have been mostly automated, versus in life, it has been less so.
Well, what are maybe some specific examples of areas where insurers expect automation to make a huge difference?
Yeah, so as we talked earlier, I mean, there are 3 or 4 big opportunities that bubbled up. So one of them, like when we stay with home insurance, the individual policy renewals each year has been a big cost center for them, and they haven't as much automated or started in their journey. So that kind of showed up at least as one of the top pillars where they're planning. I think it was roughly 20%. And then there's a second part, as we talked earlier, in straight through processing. This again is the home insurance. We saw there's a interest, at least the expectation of 50% or higher that they are planning to achieve in straight through processing for home insurance. Similarly, as we talked about, like this varies between auto, home, and others. So for example, in auto insurance, they're looking at reducing the cost incurred per application by over 40%, which has been a bigger opportunity for them in the short and near term.
Okay. And in terms of performance improvement, what were the top 3 to 4 benefits from automation that were identified by the insurance companies you surveyed?
Yeah, definitely. So broadly, there are 3 overarching themes that we have seen that came out in the survey. One of them, as we talked about, customer experience, which can make or break a brand, and which is pretty critical in a newer world. And the second one we have seen is in terms of process efficiency, because the whole work starts like how much control you have you're in the process or in the efficiency that you can drive. And the third part, as we talked about, because of all the disruptions, managing costs has been a priority. So good service, customer service is usually expensive, but we need to make sure organizations can manage costs while providing a better service. These broader themes, if you want to get specific, will manifest into a few different areas that they're looking for. One example, like few of them, at least the top ones that bubbled up, were increasing the standardization of processes, which was roughly 47% is where respondents were expecting. The second one was faster decision making. This one we talked earlier in terms of risk and managing an application that is coming through the insurance firm, which was around 42%. And the third one after that, pretty close, was improving service quality and accuracy on how you can support your customers. And a fourth one was indirect cost savings. I mean, this came up at 38%, not far behind. There are other benefits that they're looking for, but these 4 have been the bigger chunk of what we have seen.
Yeah, that's really interesting to me that many insurance companies are using automation as the tip of the spear to lead process standardization. I've been seeing that in other industries as well, but that's interesting that insurance companies are also finding a lot of benefits in that area from automation.
I mean, one thing you've also seen is the newer technologies or toolkit is enabling them to do the same process much faster. One of them, like process mining or process discovery or broadly process understanding, which in previous days where you were doing it manually, now the tools are helping you map them much faster and more accurate.
Oh, interesting. Purna, across all lines of insurance, and there's so many, obviously, auto, home and property, life, et cetera. What's the average percentage of labor time reduced to date by those companies surveyed? What did you find?
I think on an average, I mean, it varies across, as you said, across each of these verticals, but on an average, it was roughly 27% is what they have achieved so far to date.
Wow. And how do they expect that to change over the next 2 years?
Well, so the one part is most of them have tackled their low-hanging fruits. Now, as we talked about process standardization, let us take a look at end-to-end process and then try to standardize and bring automation or technology in the process. So the work will be a little harder than just what they have done so far. But even then, they're expecting in addition, like plus 14%. So roughly total of 41% is what they're expecting to have saved in the next 2 years.
I think most companies would probably sign up for 41% if they had the opportunity. Wow. So with regard to the different lines of insurance, which category did the survey reveal has the largest average percentage of labor time reduced?
This was a little stark to others, was like group benefits showed up at a highest of 48% overall in the next 2 years compared to the other ones that we've seen.
Great. And why do you think group benefits had the highest?
I mean, our hypothesis and based on client conversations have been a couple of factors, right? The one part is new ways of working, which technically got accelerated during the pandemic. And the second one is changing consumer demands. So with respect to new ways of working, remote work has been leading to growth in non-traditional labor force. I think our data showed around 10%, over 10% of labor force would quantify as a non-traditional labor force. And this is presenting a new opportunities for the insurers. And the second part about how the demand is changing or customer behaviors have been changing is preferences have been skewing towards on-demand, digital, online, and direct channels. This has increased price visibility, which means that there's a transparency across the system, which is putting additional pricing pressure for the insurers. And the third one is in most cases, even especially in group benefits, the purchasing behavior has less based on loyalty and more on the options that best fit and how much you can customize for your employees or your organization.
Well, Purna, as you know, automation really took root in banking and financial services and insurance. So most people assume that all insurance companies are already all the way to bright on the automation front. But I'm interested in your perspective. I mean, are there still a lot of insurance companies that haven't yet begun the journey? And maybe even speak to the size and the shape of those companies. Maybe it's some of the smaller ones that still haven't begun, or maybe it's still some of the big ones. But I'd love to just get your observations on that.
In my view, Brad, I think it's all, I would say it's across the spectrum. While financial institutions have started on their journey a little sooner or earlier than other industry peers, the progress that I've made has been a little choppy or mixed results. Some of them have really progressed and they are pushing the envelope on using AI, ML technologies to address their clients and redefining how the work gets done. While others have on their journey have only looked at elements of their activities that can be automated, which is where we feel like they've only looked at the low-hanging fruits or easier things to tackle. They need to think back and take a step back and figure out how can they drive a bigger potential end-to-end, not only in terms of cost savings, but also how can they be disruptive in supporting their customers in their journey. And to your point, yes, there will be both in terms of the size and scope of the company, which can drive the investments for automation. And the challenge with that, though, is it could be across the geos. Even in some insurance companies which have progressed really well, one or two of the geos have done much better than the other parts of the same organization. It's mostly, there's an element, as we talked about, like finding the right opportunities, but also there's an element of evangelization that is needed across the organization to help them drive the same benefits across the organization, across functions, and also rely on the lessons learned across the spectrum.
Well, the survey findings are really fascinating, and I think all insurance companies would find those really, really intriguing. And I know Bain summarized them in an infographic, so it's all kind of summarized in a nice, neat way. And I'll put a link to that in the show notes of the podcast. So, Purna, maybe one more question for you, just as we wrap up. How is Bain advising insurance companies to address automation in the most effective manner?
Yeah. So taking one step back, Brad, like, as much as there is, I would say, momentum and drive for most organizations with automation, there's a higher interest, there's a lot of opportunity. But in our survey, in our experience, we've seen 1 in 3 organizations have failed to achieve their automation savings target.
Mm-hmm.
And in our view, being successful in your automation program is much more than great technology. And once you start digging deeper, there have been a few failure modes that have been driving this. So we use that to guide our clients on how they should approach their automation journey. There are 4 broader guiding principles that we provide. And one of them, to start with, is to drive towards a robust pipeline of opportunities, which should be focused on automating a major portion of a defined set of jobs. This is where we talked about having a view about an end-to-end process rather than look for activities that you want to automate.
Right.
The second guiding principle for us was to take a programmatic approach to redesigning the jobs once automation takes place. This will ensure that you're using the freed up capacity and providing an opportunity for your employees to do more value-added work and supporting their customers. So the third guiding principle for us was establish a clear governance with specified targets, timings, and business owners who are accountable not only to bring these opportunities to the table, but also deliver the technology and managing the change after. And a fourth guiding principle for us was to ensure the incentives are tied to the automation goals and rewarding the skills and rewarding the initiatives and make sure the innovation can flow through the bottom line. Those have been the broader 4 guiding principles that we've been supporting our clients in looking at their automation journey. That being said, for us, as a first step, whenever we go to our clients, we usually start with deploying our digital toolkit called Automation Pathfinder. With the data that we talked about, the survey and the KPIs, everything is fed into the Pathfinder. It usually helps our clients in 4 ways. And number 1, to understand the maturity of their automation program against industry best practices so that it can enable full potential. 2 is set priorities based on which processes have the greatest savings opportunities through and pushing automation even further. And 3 was the quantifying the total savings potential, which will help for maximizing labor time reduction to the benchmark levels that we saw earlier in some of the data points. And 4, try to understand the strategy and governance of highest performing automation programs. This will give you a right framework on which you can take your automation journey further, depending on how other organizations have been successful in the journey.
Well, Purna, it's been really nice having you back on the podcast. Thank you for spending some time with me talking about automation and insurance and sharing your insights. It's great to know how much positive change is happening in the industry through intelligent automation. And I hope this conversation will kickstart those insurance companies who have not really begun their automation journey. Thanks again for your time, my friend, and be well.
Thank you so much, Brad. Happy to be here and actually giving us a platform to share more of our insights.
Thanks for tuning in to Transform Now. For more insightful discussions on digital transformation and more, check out our podcast channel where you'll find all of our previous episodes. And to make sure you never miss an episode, subscribe to the show on your favorite podcast player. And if you like what you've heard, please leave us a review. For more information about digital transformation and the future of work, check out blueprism.com to learn how SS&C Blue Prism's digital workforce is enabling enterprise transformation now.